Netflix already has the highest retention rate. For them, the HBO acquisition is an opportunity to extend their growth rapidly, like internationally, where HBO is growing at a much faster rate than anyone else. So I'm actually more surprised that Paramount hasn't. But from what I've read, also the Warner Brothers shareholders do not want that deal. So it would have to probably be a substantial jump in price to get over 90% of the shareholders to change their mind.
So Paramount Skydance today extending its tender offer for those Warner Brothers shares. The new offer expires February 20th. Does this change anything? I mean, roughly, about 168.5 million shares have been tendered as of yesterday. That's only 7% of Warner Brothers shares outstanding. So does pushing out the deadline actually mean it's going to get more support?
I don't think so. I don't think the delay is simply because people haven't had a chance to tender their shares. I just don't think that they find the offer as compelling. And also Warner Brothers management is sided with Netflix, right? It's a well-capitalized business, highest retention rate, content creation machine, especially on a global basis, non-English language content. And so I think it's just really hard for Paramount that's so much smaller to compete with it. Like, what does it bring to the table for Warner Brothers?
What do you
think?
I
think that's the question.
And Seema, if Paramount does not get it, and you suggest that they probably need it, it's a must-have versus maybe a nice-to-have for Netflix. What happens, do you think, to Paramount if they don't get this deal? Then what do they do?
Well, I think it just pushes them further to the margin, right? As I said, they only have like 4% of active user share on a global basis. Just to put that in perspective, obviously Netflix is the behemoth at 48%. Amazon and Disney Plus are at about 15%. So I'm not sure how they continue to really grow. They would have to really change their model. How are they going to grow internationally? Are they going to try to get more sports? Are they going to have local language content? All of those endeavors to grow and become larger require a lot of funding, right? For sports rights, content creation. So I feel like they'll sort of still be on the periphery in many cases compared to the larger streamers. And as a whole, by the way, the entire space is also competing with short form video and just simply people's attention being pulled in other directions, right? So I think that's kind of where that leaves them if they don't get the deal.
So Seema, Sensor Tower is a digital market intelligence platform. You provide data, analytics, insights into the mobile app ecosystem. What does your research, what does your data show about people's engagement with Warner Brothers properties? I mean, beyond HBO, the other stuff, and I guess that includes the cable networks that Warner Brothers wants to spin off, that Paramount wants to buy, and that Netflix doesn't. And how does that compare to, say, what Netflix offers people?
Well, Netflix has the highest retention rate across the space, right? 74% of its users are retained users. People spend about 91 minutes per week, 11 sessions per week on Netflix. In comparison, it's about 6.4 sessions per week on Paramount. And HBO is sort of in the middle. Our data is really focused on the digital side of the business versus any linear TV, and then also our advertising data. So I think what is also very attractive about HBO is its advertising and the space, the categories that it's in, where it has decent share, about 4%. It's like in healthcare, which is the largest category, where OTT is the largest channel for healthcare. And Netflix doesn't have that much exposure there. So I think that is a plus for them. As far as like Paramount wanting the other assets, I think it goes back with like, they want to get what they can get so they can see how they can figure out how to grow their own business, right? So I think that's why they're willing to take everything rather than sort of curate the way Netflix is.
The Netflix stock is down 10% this year and 12% over the trailing 12 months. Is that kind of the market saying, hey, I'm not sure we want you guys to buy this thing?
Well, it also has done very well in the past. It might be, or maybe it's just simply the uncertainty of whether, even if they get the deal, if they'll be able to get through antitrust, the FTC, will there be any issues getting the deal through? So I feel like it's more about that, and maybe just the general idea that across streaming, time spent is down. And it goes back to what I said about distractions for the consumer from short form video and other types of technology that's taking time. So I think it might be that sort of the deal with regulation, and then just sort of what's happening in streaming and the cost of streaming to get the content that gets the highest audience costs a lot of money, right? And they have a lot of competitors, including the micro dramas that, have been growing very rapidly.